I'm Roger Lasad and I love real estate. Welcome to my channel and this is episode 12. Well, we'll be answering the question on everyone's mind, how's the market? All right, guys, let's take a deep dive into this. Warning, there are going to be graphs ahead, so if you're not the type that's really big into stats or graphs, you should probably exit left now. For those of you that do want to find out what's going on with the market, please watch, keep along, keep watching. All right, so a lot of you guys might have heard that there's a recession coming, maybe even a depression coming, while at the same time, people are telling you, hey, this is probably going to be the best opportunity to jump into the real estate market. You just got to wait a little bit longer and wait for the crash. All right, guys. Does anyone remember what happened in 2020? Something really important. Believe a particular pandemic happened, and because of that, people started anticipating that there was going to be a market crash. And then a lot of people started coming out and started looking to purchase real estate because the prevailing feeling was that there were going to be deals to be had. Shortly after that, people started escaping areas that were hit bad with COVID, relocating to other areas that weren't as bad, or at least hadn't been locked down as much, especially those that were granted the ability to work remote. So they relocated to the other areas. So all of this kind of contributed into building a very strong demand. And then pretty much the exact opposite happened of what everyone was expecting, which the market didn't crash. In fact, it kind of went up, 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 right? But what about now? What are we seeing? I mean, what am I seeing? I mean, interest rates are up, right? Surely this has to have a crazy impact on the market. And surely this must mean that we're around the corner from a historic recession, even a depression, where deals are bound to be had. Well, today I was sent some information from the Miami Realtors. Thank you very much for doing that. And many of your graphs will be the main topic of this discussion. But before we get into this, I just want to say something and make sure everyone understands something. I'm not stating that I have a crystal ball. I don't want to make that indication like I really know what's going to happen. All I can do is just look at the data and the numbers and use that as a guide. Um, and I would be very wary of anyone that claims that they know what's going to happen in the future of real estate. Because to me, if you make a claim like that, you're pretty much one of three different types of people. Number one, either you're a liar. Number two, you're delusional. Or number three, you're a billionaire or pretty much on your way to becoming a billionaire. And chances are, if you have that much money, are you really going to go out of your way to tell people what to expect when you know how to take advantage of that situation, which is why you made all this money in the first place? Probably not. So, with that being said, let's jump into a couple of graphs that's going to break down how's the market. Okay, guys. So this is based off of information that Miami Realtors compiled, and this is based on, well, the first graphic we're looking at, first graph we're looking at is based on Miami-Dade existing home sales, and this is May of 2022. So as we can see, Miami-Dade total home sales decreased by almost 10%, 9.7. And numbers-wise, they basically sold about 343 homes less in 2022 than we did in 2021. So they break this down into home sales and condos and townhomes. So as you can see, if we look at home sales, that's gone by 12.3%. And then condos by 7.9. And then here's the difference in numbers, which we're looking at, like not even 200 homes difference here, and about 171 homes difference in the condo townhomes. And obviously, dollar value, that's decreased, etc., etc. But now, here's what's very interesting though. Total active listings have decreased by a third. So, and this is why I say it's important to really look at the stats and everything, because we're definitely seeing up here where we're seeing home sales are down, and then we get here, but there's way less homes on the market, significantly way less, which is what I was getting at in earlier videos. And I've been telling people that even though we've got some economic headwinds ahead of us, it still hasn't resulted in increased inventory. In fact, inventory is down significantly around the same time last year. And I know what some of you guys are saying. Some of you are like, but Roger, that's May. We just had this huge rate increase in June. Give it time. And you're absolutely right. This could all change. But as of right now, we have 2.2 months of single family homes on the market in Miami-Dade and 2.5 months. And what that essentially means is, based upon the rate that previous homes have sold, how much time would it take for all of the homes on the market to sell? So according to this, and granted, this is a bit of a trailing indicator. This is basically telling you what happened back in May. But they're saying in May, it was only taking 2.2 months to sell a single family house on average, and 2.5 months. Generally speaking, to get to a balanced market, we need to be more around 6 months. To get to a buyer's market, we need to be more in the neighborhood of 7, 8 months or more for a buyer's market. So as you can see here, we are still in a seller's market. But now let's look at this median sales price. Keeping in mind all those numbers you just seen. Single family home, the price increased year over year, 15%. So, and then condos and townhouses increased by 27.7%. So what does this mean? This means that for those that purchased their home a year ago, they have 50% more equity. So if you purchased your house for, we'll do a little quick math here, for $500,000, yeah, you would have about $75,000 worth of equity in your house. Now, another way to look at it would be that for you to be in a negative, and basically it's symbolic, because as long as you don't sell, you don't really realize those negative gains. But as of right now, whatever recession, crash, or whatever that might happen or might not happen, your house would have to decrease by 15%, or actually more than 50%, for you to be, I don't want to use the term at a loss, but basically for you to be in a situation where you purchased your home for more than it's actually worth now. I mean, for a condo or townhome, it would have to drop like 27%, more than 27% for that to happen. So now let's move down. So now we're going to look at Broward. So we're seeing a similar story in Broward County, which, by the way, for those of you who don't know, Broward County is where Fort Lauderdale, places like Davie Plantation, Parkland, Coral Springs, Weston, etc. So yeah, so home sales increased by 12.8%. And then it breaks it down here. Pretty much same story as Miami. And dollar volume actually increased. Interesting. So even though the number of homes decreased, the dollar value increased, which means that more of the homes being sold were worth more, essentially. And then we have another thing too, which, see, and this is the problem that I was kind of warning against. So active listings also here decreased by a substantial amount, which this is saying, a constraining of inventory, which, as I said before in other videos, until we get the supply chain situation ironed out, until we get gas prices back to what had been considered normal for quite some time, chances, and then to be quite honest, the interest rates aren't helping things either. I mean, right now, because of all these factors, it's causing developers and builders to focus on the upper ends of the market, as well as some guys have just walked away from projects or have halted projects because they can't make as much money or any money, and who wants to work for free, right? So, all right, so let's see here. And then, so single family homes increased by 26. See, this is what I'm talking about, guys. And the reason I want to bring this home is I have a handful of buyers that I've been in contact with since 2018, 2019. I mean, if they had just bought in Broward County a year ago, they would have 26% equity, which, I mean, that's over $100,000 in equity that they would have had. Actually, let's do some quick math. If they had bought a home for $500K, yeah, that they would have $130,000 worth of equity, which, once again, I don't have a crystal ball. Maybe the world is going to end in 6 months, a year and a half. I don't know. But I would say if you had bought a home for $500,000 in Broward County, chances are you would have 26% equity, which means that your home would have to lose more than $130,000 in value for you to be underwater. Now, is it possible something that can happen? Absolutely. Am I seeing the likelihood of that happening? I mean, like I said, based on the information that I'm seeing here, I would say it's unlikely. I think the worst that's going to happen is that prices are not going to keep going up. Like I definitely don't see a 26% increase in home value a year from now. I mean, once again, I could be wrong about that too, but I don't see that. I definitely do see a slowing in increases of home prices, or maybe even home prices get to the point where they stabilize. But as far as them going back, I don't see what would cause that. So now let's go down to Palm Beach, existing home sales. Okay, once again, same story, significant decrease in home sales, single family, condos, etc. Dollar volume definitely decreased. Oh, this is interesting. So active listings barely decreased. So actually, this is actually a very, very interesting chart. And I really don't have an explanation for why we would see such a decrease in dollar volume and single family sales, but the active listings have not decreased. Yeah, that's fairly interesting. But once again, if we go down here and we look at how many months of inventory, I mean 1.7, 1.3. So basically what they're saying is if you put your house on the market in the month of May and it was priced appropriately, it would be off the market within 1.6. I mean, not just that home, but all of the homes on the market that were put in the market in May would be off the market in less than 2 months. That's essentially what that's saying, which is an extremely strong seller's market. All right, so single family home price increased by 30%. Once again, I mean, it's the same thing that I'm saying. And the point I want to make is that, yeah, I mean, I have buyers that have been sitting on the sidelines since 2018, and because they're thinking every year, they're thinking there's a recession coming. So the question I want you guys to ask is that And if you're one of these people, ask yourselves this question, like, would you have been better off if you had just purchased something in 2018, 2019, 2020, even 2021? If you're still on the sidelines waiting, like, and I'm starting to think that a lot of these people, or most of them, it's not that they're waiting for a deal, they're just risk averse. I think that's what, because I'm pretty sure the same people, if there is a recession, depression, or some type of major correction or crash, and I go back and be like, hey, all right, everything's on sale now. What are you gonna do? I'm sure I'll be like, oh, well, I think I'm gonna wait now. I'm not comfortable buying in such a bad economy. I mean, I already had a few people tapped out, and they were like, well, yeah, I'm hearing a lot of job layoffs. I'm gonna pause my home search, and I'm like, come on, guys. You were the same people that were saying that you wanted deals. Hey, it is what it is. Martin. What else we got here? Okay, we're all over the place with the different counties, but I won't bore you with that. Okay, so fears of recession. As you can see, housing market still looks pretty strong as of May. When the June numbers come out, I'll definitely review those as well and see what type of change. Recession fears, I think definitely there being a recession, I think those fears are founded, but it would be a very unusual recession because one of the things that usually go hand in hand in recession is high unemployment, which we actually have strong unemployment. So that's a little strange. But as far as the economy contracting, that could very well be the case. And I mean, to be quite honest, that's actually the aim of the Fed, raising the overnight Fed funds rate to basically slow down how much money is being lended out and how much money is being spent, which generally should actually result in the economy slowing down. But the big question is by how much? And the second question is, what will the Fed's reaction be? Like, obviously, the Fed doesn't want to break the economy. They just want to slow it down a little bit. They definitely don't want it to come to a crashing halt. So if it starts slowing too much, there's still always the possibility that the Fed may not continue with its rate increases, which, could be a good thing for the economy depending on which side of the fence you reside in. Because there are some people that feel that we should go through some short-term pain, i.e. a recession, by them continuing to raise rates. And that'll clear out a bunch of financially weak companies, as well as a lot of people that may have overextended themselves by not leveraging properly. So I guess we're basically going to wait and see. But the main thing I want people to understand is, to my knowledge, no one can really predict when real estate markets are going to turn. And so far, I have yet to meet anyone that regretted buying real estate. I just have met a bunch of people that regretted waiting and not buying real estate. Anyway, guys, I'm Roger Lasad. Thank you for sitting through all those graphs and stats, and I will be back soon with another video helping you demystify real estate. All right, have a good evening, people.